Someone who is an employee at a business may enjoy the ability to come to work at the beginning of the shift, do their job very well, and go home at the end, without having to think another thought about the business or what is happening with it. Anyone who performs in a managerial, supervisory, executive, or ownership position has a very different experience. For them, it's likely that participating in, thinking about, and making decisions related to the business occurs more hours of each day of every week than it does not. For owners and executives, business is not something that limits itself to operating hours. Granted, a small sole proprietorship does not present quite as many different elements or to the level that a large corporation may, but still, the elements need to be considered, tracked, managed, and the decisions to be made. All of these things remain the same, regardless. In fact, since many small business owners wear many hats, they often work double or even triple what a regular employee would. Fortunately, Excel can assist in these processes, from logging of raw data for contact information, inventory, marketing, and sales, through their production and presentation of documents. All of these things are necessary to accurately analyze the status of the business and present that information for others. To own, manage, or be an active part of your business, you need to know how to identify the purpose of basic financial statements, how to calculate cash flow, how to resolve business ratios, how to calculate values necessary to attain goals, and how to present quality professional business documents. To be successful, you must have a clear picture of your business. Businesses produce a tremendous amount of numbers, but numbers don't really mean anything on their own. Numbers must be put into context in order to have meaning, relevance, and to be part of decision-making. Financial statements provide a standardized framework for that understanding. They give clues into actual financial position, performance, and even changes that may be occurring within the company. Ratios establish a relationship or correlation between numbers. Ratios in business provide a simplified, standardized way to analyze that business. Positive cash flow is required for any business to survive, and lack of cash flow is usually an immediate significant problem. The cash flow statement shows liquidity based on inflows and outflows. These and other types of financial statements assist in making good business decisions, both for the present and into the future. The ability to make professional presentations of this information is critical to build confidence, both internally and externally. And the ability to forecast and calculate or know required numbers in order to meet your goals is important for business planning. In order to learn these things, we'll be using a lot of Excel tools, including comments, conditional formatting, exporting and sharing options, linking of data, file properties, headers and footers, names or naming, print settings, and what-if analysis. And we'll be touching on a lot of business topics, kind of the high-end stuff, if you will, including balance sheets, business ratios, cash flows, financial statements in general, forecasting, and income statements. So far, we've summarized what you need to know, why you need to know it, as well as some specific Excel skills and business topics that we'll be working within this chapter. In Part 2 of this topic introduction, we'll provide a primer on financial statements, business ratios, why you need them, who they are for, what they require to provide a solid foundation for working with these types of documents in Excel, and more. A long time ago in a land far, far away, well, actually it wasn't a land far, far away. It's exactly where I still come from. But, every good story starts that way, and I kind of wanted to tell you a good story. So in any event, what I was getting to was that in 1994, I started my business, and as a proud and ambitious young sole proprietor, I prepared a business and marketing plan and even put together some documents having to do with how I was going to provide training and design classes. I ran the business successfully by myself for several years. While I had a few of those basic documents, pretty much everything else related especially to finances was in my head, with the exception of maybe the monthly bank statements, which at that point in time we still got in paper form. It was not a problem. I could tell you everything you needed to know, but when I wanted to build a training center, after things had grown a bit, banks did not know what was in my head, nor were they very impressed with the fact that that's where a majority of my financial information and business decisions came from. It's not that I didn't know better, it's just that at that point, I really didn't see the need for financial documents that would take a lot of time to prepare and keep up to date. I knew what I needed to know, but now we had other people who needed to know what I knew. I had to bite the bullet and generate a category of documents known as financial statements. What I learned was that it's just a few simple documents, and they could concretely and succinctly verify the status of my business beyond just my own opinion. They basically proved my point, and that's what the banks wanted to see. It kind of surprised me that it actually added to my own peace of mind as well. Financial statements, simply put, are formal documents showing the financial position, performance, and changes of a business. They should be in a standardized format, which makes them easy to understand, and it also makes them applicable to all types of business. They assist in providing a clear understanding of business status based on data, not just opinions. It ensures that reporting from period to period within a business is consistent, and they're also consistent between companies or businesses, which is important for institutions like banks. They make analysis easier, and in fact, preparation is easier as well because they always take the same format, so only the numbers change from period to period or year to year. Whether the company is large or small, business decisions can then be based on solid financial fact, combined with accurate analysis and discussions between those who need to make the decisions. There are a lot of different types of financial statements, but the three basic financial statements that every business should have include, first of all, the balance sheet. The balance sheet can also be referred to as a statement of financial position. It reports on a company's assets, liabilities, and owner's equity at a given point in time. And that part's important. It's the only one of the three that is at a particular point in time. The second is an income statement, or what I like to call a P&L, which stands for profit and loss. It can also be called a statement of comprehensive income or a statement of revenue and expenses. It reports on a company's income, expenses, and profits over a period of time. It includes sales and the various expenses incurred during the stated period. Lastly, we have the statement of cash flows. This reports on a company's cash flow activities, particularly its operating, investing, and financing activities. It has to do with how liquid a company is or how much cash they have available if, for whatever reason, they need it. Each of these financial statements may be just a single page, especially for small or simple businesses. For corporations, they can be very long, very complex, and with a lot of supporting documentation and notes. And for large corporations, they are usually generated at a high level using data from many, many sources. For smaller businesses, they may come simply from a sales log or a checking account register. Like I said, when I first started, I didn't think I needed financial statements. Who does really need them? Well, of course, owners, which is equivalent to shareholders for publicly held companies, need these types of statements to know the accurate status of the business. Executives need them to help make decisions. And managers also need this to know how to work with day-to-day operations and to make decisions at that level as well. The accountants, of course, are going to want to see them because it is the high level and they can see if there's anything going on that needs their attention. In some cases, employees can use these in order to have collective bargaining or just so the management can share how well you're doing. Investors always want to see financial statements. They could care less, really, about your opinion. They really want to know what the numbers say. And that's usually the same for anybody who's going to finance, including things like banks or maybe even your parents or best friends. On occasion, and for some businesses, the government may also be interested. If you're a publicly held company that trades stock, this is part of the annual report that has to be produced. You may need them for other types of government reporting as well. Okay, so now that I have you convinced that you probably should be producing them, what do financial statements require? Well, first and foremost, they must contain accurate data. That should go without saying, but these days you just have to make sure you say it anyway. They also may require strong documentation. The financial statement may be the only piece of information that people look at, but if you are involved in an audit or if you're looking for financing, people may want to know where those numbers came from, and we'd better be able to produce that documentation. They should use a standardized format, and that comes from something called GAAP, or Generally Accepted Accounting Principles. It basically says that a balance sheet should have certain entries in certain categories and be arranged in a certain way. Anymore, it's not so much that they all have to be Times New Roman 12 point on an 8.5 by 11 piece of paper. We can be a little more creative, use a little more different things like shading and different fonts. But in general, the format of financial statements doesn't change that much. And in fact, it shouldn't. When you present them to someone like a bank, they want to look at it and be able to quickly and easily find what they're looking for. And that comes to our last requirement, which is that they have a clean presentation. Don't get too crazy with all kinds of fancy fonts and colors. Pretty much black on white works well, although we do have a little more latitude these days. While many feel that the financial statements are kind of like the end or the final documents of the whole process that are produced, there are actually other business tools that utilize the numbers on the financial statements as well. One of them is the calculation of financial ratios. Ratios, in any context, at least mathematically speaking, are two numbers, numeric values, that are related to one another or define a relationship between the two. For example, 1 to 4 can mean that you ate one piece of pizza out of the 4 slices that came from the whole pizza, assuming that all 4 slices were of the same consistent size. These are the types of ratios we're used to working with in real life, and they really apply to business as well. It's just two numbers, and they represent proportions. They're calculated from our financial statements, and that's why those financial statements can be so important. Ratios are used in many ways in order to evaluate the overall financial condition of the company. Because they are ratios, they are somewhat standardized so that companies without a lot of history can compare their performance, their ratios, to other similar businesses to see how they're doing. Ratios even allow unlike businesses to be compared. This allows for things like the financial analysts and markets to compare the strengths and weaknesses of various companies to one another, including their value in the financial markets if they're publicly held. At all levels, managers can use them to gain insights into performance, creditors can use them to determine creditworthiness, and onward and onward and onward. Now, if we remember elementary school, we learned that ratios can be expressed as decimals or as percentages. Just like anything else we calculate in life, either way of expressing them is equivalent. For example, if you got 8 out of 10 questions correct on a quiz, that could be expressed as 8 over 10 or 8/10. It could also be expressed as 0.8 or 80%. All of them mean exactly the same thing. There are 3 different categories of financial ratios, and this goes a lot further than we're going to go in this particular course, but just for your basic background information. Ratios can be categorized as liquidity, profitability, or efficiency ratios. Liquidity ratios are the ability to meet short-term obligations. Profitability goes to the overall performance, for example, sales to profits and returns on investment, or ROI. Efficiency has to do with the cost required to generate each dollar of revenue, and this is probably one that everybody's familiar with, even if you haven't heard the term specifically. For example, we know that if it cost us $80 to produce something, but we were able to sell it for $160, we might be able to say that we doubled it. But they do get a little more difficult than that because, of course, that doesn't take into account any of our overhead costs. That's why ratios are part of the top-level financial statements, because all of those other considerations are already taken into account before the ratio is calculated. That's about as deep as we're going to get into finance. But know that financial ratios and financial statements are a common core element of businesses of all sizes around the world, or at least they should be. Without them, we and those whom we ask to be involved in our business must guess at the actual status of the business itself. Being able to create and share these documents with others provides the ability to make informed business decisions, to communicate business status in kind of a reliable, credible way to staff and management, to secure financing, and to report to investors. And all of this is going to lay the foundation for business success. We speak of money in different ways in our lives. We also often refer to cash. But in business, cash has a very specific meaning. It's money the company has control of and access to. Both of these must be available and present in order for something to be considered as cash. Balance sheets show the health of a business on a specific date, taking all things into account. Income statements show how a business performed over a period of time. Both of these financial statements are historical in nature, but the cash flow statement, on the other hand, looks to the future. It identifies when cash will be needed to pay bills and things, and can help managers make important decisions. Unlike the balance sheet, the cash flow statement only considers cash activity, not anything involving credit or other types of investments. Cash taken in and cash paid out is all that matters for the cash flow statement. We have the cash flow file open from the Chapter 5 Working Files folder. It's actually based off of a Microsoft template, so if you're looking for it, try doing a search when you open a new file using the Backstage view in Excel. These types of financial statements can take a significant amount of time and effort in order to set them up. So I actually do recommend that if you find a need for one of these, that you try to find a template to begin with and then customize it to meet your needs. It will be well worth your while and save you a lot of time and effort. One of the first things we want to do with this particular file is ensure that the fiscal year all the way over on the right-hand side in cell P2 is actually accurate. Currently, it's empty. Now, we'll see why this is important in just a second. But let's go ahead and enter the beginning of 2014, January 1st, 2014. While it may seem like this is just a simple date value in a cell, it actually drives the display of our labels. If you take a look at the labels that are highlighted in row 7, you can see that currently they all have the months of the year, but they're also set for the year 00. Watch what happens when we press Enter. Nothing happens when we press Enter, and that's okay because we've only done the first step. I want to have us kind of build this without having to do a lot of typing. So we entered the fiscal year into cell P2. It occurs to me that we may need to refer to the fiscal year more than once, not only for this particular worksheet, but maybe throughout the workbook. I can almost guarantee you that, maybe 5 or 10 seconds from now, none of us are going to remember that it's cell P2 that contains this information. We will remember that it contains our fiscal year. In order to make life easier, which I am all about, we're going to move back up and select cell P2, and then we're actually going to name it fiscal year. That way we can use the easy-to-remember real name instead of the cell address. Creating names can be done in many different ways, but we're going to do this the fast and easy way. Once the cell is selected, we simply need to move back to the left side of the screen and find the name box to the left of the formula bar. If we click in the name box, we can type the name fiscal year with no spaces. Names cannot contain spaces. All we have to do then is press Enter to save the name. So far, so good. All we've done is made it so that we can refer to this particular cell in this worksheet, either as P2 or as fiscal year. Now, to show how this can be used, we want to move down to what should be the very first one of our date labels. This happens to be in cell C7. All of the data labels in row 7 rely on the value in C7 to derive their values. So notice they're still showing the months of the year, but the year is still set to 00. By designating the value in C7, we then drive the values in all of these other cells. In other words, 13 of them. Now, we certainly could just type in a date, but in order to utilize what we're doing, we want cell C7 to take whatever value is entered in cell P2 and use that same value. In order to link data in this way, whether it be on the same worksheet or a different worksheet, or even in a completely different workbook file, all we have to do is type the equal sign and then either enter the cell address, the range of cells, or in our case, the name that we applied to the cell that we want. Do you remember the name? It was fiscal year, so I'll simply type that out. Equals fiscal year, no spaces, and when we press Enter, magically, we just updated 12 other cell values based on the value that we entered in C7 using a name that refers back to cell P2. I'm noticing that the font is a little bit different in C7, so we're just going to go ahead and move to one of the cells that is formatted, go to the Home tab, and in the very first group for the clipboard, click the Format Painter, and then click back on cell C7 so that it updates and is consistent. Names and linking to cells kind of go back to what I like to call one of my commandments of Excel usage, and that commandment is, thou shalt have 1 point of data entry. If we're going to refer to a specific fiscal year, not only on this worksheet, but throughout the entire workbook, that fiscal year value should only be entered one time. Everything that needs to utilize it should refer back to that one cell. We can do it the old-fashioned way, but by giving it a name, it's much easier to remember, and we're not going to be constantly bouncing back and forth between worksheets trying to figure out a cell address. Because it exists in one area and always refers to that area, we will only have to update it one time. By updating it once, we're absolutely guaranteed that everything that refers back to that date or relies upon it will update as well. And that's going to make our worksheets and workbooks more efficient and more accurate. By the way, if we ever want to see, manage, or work with names, we can open the Name Manager found under the Defined Names group. Here we can see all of the names that have been defined for the entire workbook. We can create new names, edit existing ones, delete names, as well as see for each one that has been defined what its current value is, what cell or range of cells or formulas or functions it refers to, if it's applicable to the workbook or to something else, and even leave comments. So this is like your master control center for names. So far, we've used names and linked data. In the second part of this topic, we're going to take it one step further and work with some of the more advanced functionality of our cash flow statement, including the ability to trace precedents for formulas and functions and create and manage hyperlinks. In part one of this topic, we named a cell, and then we linked to the named cell in order to populate and complete all of our labels on our cash flow statement. Now that we have our labels configured, let's take a look at the rest of the worksheet as a whole. There's a whole lot going on, and actually, the main body of the worksheet has several sections. As we scroll, we can see a cash summary, cash paid out, and various individual line items or subcategories for each of these main categories. These are some of the main things that are always required on a cash flow statement. Cash summary represents our current cash on hand, and we're going to focus on this particular area for our next work with this particular statement. Cash on hand is represented on line 9. There are various values entered, including the monthly values, at least through May, which is as far as the projections have gone for this particular fiscal year so far. All the way over on the right-hand side of the screen, there's a monthly average cell. This happens to be cell O9. This is a fairly standard layout, and it's probably not too difficult to realize that the monthly average value in O9 is simply going to average the values from January through December. That's a pretty straightforward function. But the point is, as we get more complex worksheets, it gets more difficult to figure out where sources of formulas and functions come from. We can sometimes spend a lot of time trying to trace where the information that goes into a particular calculation is actually located. Fortunately, there is a visual way to simplify understanding this not only for ourselves, but also if we're trying to explain to other people how a worksheet is put together. Trust me, I use this a lot when I'm doing training or I'm orienting people to a template or something that I've created on their behalf. If we want to know what inputs are going into the calculation in cell O9, we can move up to the Formulas tab, and over on the right-hand side, look for the Formula Auditing group. From here, there are 3 related options: trace precedents, trace dependents, and remove arrows. We're going to start by clicking one time on Trace Precedents. You can see that Excel creates a line or an arrow showing where all of the inputs are. Currently, they are January, February, March, and April, as well as May in row 9. Well, that's all good. It shows a little arrow that's going from those values over to our value that is currently being displayed in O9. But sometimes things aren't just from one source. Maybe those sources have a source. So let's go ahead and expand the ribbon again so that we can see the Formulas tab, and click or tap on Trace Precedents one more time. This expands it one more level and shows that each one of our values for January through May also has inputs. Now we're getting a really clear idea of all of the numbers and values that are going into our final monthly average in cell O9. It clarifies the source of all the values, and it is much faster, especially in more complicated worksheets, than trying to figure it out by tracing cell references back to individual cells and ranges. Now, once we're done figuring out what the source is, we want to get rid of those arrows. So we can go back to the Formulas tab and choose Remove Arrows. We do have a second option, by the way, which is Dependent Arrows. Dependent arrows would show all of the cells that were based off of the currently selected cell. So if the monthly average were used to calculate something else, it would show an arrow starting in cell O9 and going to whatever the destination or destinations were. We're going to go ahead and remove all of our arrows and clean up our worksheet so it looks normal again. But remember, you can do that anytime you need clarification. Now, I'm not sure whether you noticed or not, but underneath our fiscal year is a little floating element that has been added to the worksheet, and it is a formatted text box that says Cash Flow Summary. Right now, it's just kind of sitting there and not doing much of anything, but we're going to make it do something here in just a second. What we know is that many of our executives will be looking at the summary, and we want to be sure that they can understand the data as easily as possible. So a chart has been created on its own worksheet. If you look down at the bottom of the screen, you'll see it. It's called Cash Flow Summary. We could have people simply click on the tab like all of us do all of the time, but we want to create a more elegant solution. So we're going to create a hyperlink that people can click on that will show them the chart. If we have an element selected, we can move to the Insert tab. And over near the right-hand edge, in the Links group, we can click or tap Hyperlink. This displays the hyperlink window. Because we already have our elements selected, we don't need to type in any text to display. All we need to do is designate what we want to hyperlink to. Now, this can be useful for a wide variety of things when we talk about business uses in Excel. We can go to completely different files or web pages that have nothing to do with Excel. And that's great when we want to refer people to our company web page or maybe to underlying source data. We also can refer or hyperlink to places in this document. When we select this option, we simply have to designate the page or the named area to which we want to link. I'm going to scroll up just a little bit so that we can see the labels. Under the cell reference section, we have each of our worksheets, and the one that we want to link to is the Cash Flow Summary page. By selecting this and then clicking or tapping OK on the bottom right, we've now created a hyperlink. If we pause over the element, you'll see that it now has the hyperlink finger. That means it obviously can't wait for us to give it a click. So let's click or tap on it, and voila! Now we instantly get to see our chart. You'll notice that a similar type of functionality has been built into the chart itself to go back to the cash flow worksheet. That certainly isn't anything that's required, but it makes it easier for this to use, especially if someone is not that familiar with Excel and the fact that there could be multiple worksheet tabs at the bottom of the screen. By utilizing Excel features like naming, linking, and hyperlinks, we can provide an added level of professionalism and elegance to our worksheets, not to mention simplifying the efforts required to create and manage them. Tools such as tracking precedence and dependence can also help us understand the flow of information, especially in complex worksheets, whether we created them or we're trying to figure out what someone else did, or communicate how a worksheet works to someone else. As the saying goes, we can do things the easy way, or we can do them the hard way. And when it comes to dealing with complex worksheets, or anything for that matter, I'll choose the easiest way possible every time. In this case, it's not only working smarter, it's also ensuring that our worksheets are accurate. And that should always be our goal, especially when it comes to working with financial statements. How do we know the financial health of our business at any point in time? Is it because we have a positive balance in our checking account? Is it because we've been selling significant volumes of goods and services? While these may be positive signs, neither indicates actually being profitable. The best way to tell is by reviewing the balance sheet. It's a summary of the assets, liabilities, and owner equity as of a specific date. Balance sheets are often created at the end of a fiscal year. We have a simple balance sheet open from the Chapter 5 Working Files folder. It's called Balance Sheet Ratios. It contains the 3 parts expected for a balance sheet: assets, liabilities, and owner's equity. The details of assets are listed on the left. If we scroll down just a little bit, we can see these sections a little bit better. The assets are listed in order of liquidity. That means cash comes first, and assets that may take some time to liquidate come at the end. We see liabilities listed in the same way. These numbers represent the culmination of a variety of data sources. The figures are the high-end overview of the status of our business. One way to look at the balance sheet is that total assets equal total liabilities plus money the owners have put into the business known as owner's equity. That's important because if we were, let's say, to buy a computer, which would be considered an asset, it had to be purchased either by borrowing money, like on a credit card, which would be a liability because we still owe money for it, or by using the owner's money, which would have otherwise gone to profit. The $1,000 computer that was purchased and is now considered an asset has to be offset somehow by how we paid for it, by debiting either our cash or saying that we still owe money for it. This is why balance sheets show assets on one side and liabilities and net worth on the other side, because the two sections balance each other out, hence the name balance sheet. All of these figures have already been calculated, and if we scroll back up to the top, we'll see that our balance sheet has some standard ratios at the top to help simplify what the balance sheet means by putting even these simple numbers into further context. The first in our worksheet is actually called the current ratio. These letters that we see designated are actually captioned on the balance sheet values below to help us figure out where the numbers are coming from and what the ratios are using to come to their conclusions. The current ratio measures the business's ability to meet short-term obligations. It's simply a calculation of dividing total assets by total liabilities and owner's equity. We can see that our current ratio is 0.45. The ratio just below that is known as the quick ratio. It is a variation on the current ratio and is sometimes referred to as the acid or litmus test that you may have heard about in the news. It does not include inventory because it's assumed that inventory would take some time to convert to cash. So, for this particular calculation, it's not considered something that we could get our hands on immediately to use to pay for something. Our quick ratio is currently 0.29 or 29%. If this ratio is too low, it may mean that we are at risk of not being able to pay off bills and debts on time, or to take advantage of things like cash discounts from our vendors. So these ratios are really very important. Because of that, we want to make sure that we notice when they reach an undesired level for our company's business and needs. We want to clearly indicate how this number falls into our management team's desired ranges. They would be more than pleased if our ratio was always at 0.5 or higher, although they're satisfied if it's anything above 0.25. But if it falls below 0.25, they know that we must make some immediate and significant adjustments. So let's apply some conditional formatting that will more easily show us which of these three ranges the current ratio falls. With cell B14 selected, we can activate the Home tab, and near the right-hand side, in the Styles group, we see the conditional formatting option. There are a ton of different options, but we want this to be very visual, so we're going to select an icon set. There are several different icon sets that we could choose. I'm not sure the arrows are necessarily appropriate, but let's go down to indicators. Let's choose one that has the check mark, the warning sign with the exclamation mark, or the X. Now, this simply applies a generic rule, and it may or may not meet our rule. So now we need to go back to the Home tab and back to conditional formatting, but this time go all the way at the bottom and manage our rules. We need to edit this rule so that it meets our criteria, not Excel's criteria. So we'll select it and then click or tap Edit Rule near the top of the window. The first thing that we notice is it's just looking at percentages, and we don't want percentages. So we're going to reconfigure it to look for a particular number. We know that it's good anytime our value is greater than or equal to 0.5. We'll do the same for the second, except our magic value there is 0.25, and that means that anything left over is going to go to the red X, in this case, less than 0.25. We can click or tap OK, click OK one more time, and there our indicator is updated to say we're not too bad off, but it could be better. This is a good start. We have a good understanding of our balance sheet, and we've been able to look at our ratios. We've applied the conditional format, but in part 2 of this topic, we'll go ahead and take it a little bit further and see if we can figure out how to get this to be a better number, closer to that 0.5, as well as share a comment that will tell our managers what we found was the result to that question. In part 1 of this topic, we took a closer look at balance sheets and ratios. In this part, we're going to take that a little bit further and see if we can actually find a result that will make that number a little bit better, and then leave a note for our management to know what results we found. As a manager, we're concerned that the current quick ratio value of 0.29 is too close to the unacceptable range. We're curious how much cash on hand would be required if all of our other assets remained equal to reach the desired 0.5 ratio that our management wants. We could do this using the hunt and peck method, which reminds me of the Price is Right game. People tried to guess a price first by starting off in thousands of dollars and then hundreds of dollars, tens, and finally counting 1, 2, 3, 4, 5, 6, 7, 8, 9 as fast as they could until they hit the exact price. It's a game that goes at a fevered pitch and is kind of fun to watch, but I really have no desire to invest a lot of time playing that kind of a game with my financial figures. Instead, we're going to use Excel's what-if tools to accurately and quickly find the value we're looking for. These tools can be found under the Data tab. Near the right-hand side, under the Data Tools group, under the What-If Analysis option. We can work with scenarios, which certainly are great and very useful in business, but we're looking for something fairly simple, so we're going to choose Goal Seek. Goal Seek simply wants to know what cell we want to set the value of, what value we want to set it to, and which cell we are willing to change in order to reach that goal. Since we already had our cell selected, B14 is already there, we simply need to enter our value, and we're going to enter 0.5. The cell whose value we're willing to change is our cash on hand, which happens to be cell C22. So we'll go ahead and type that in, or you could also click on it. All we need to do is click or tap OK. Sometimes we try to ask a cell to do things that are impossible, but in this case, it actually is very simple. It tells us that it found a solution, the target value of 0.5 has been reached, and actually has been set. If we look carefully, we can see that the cash and cash equivalents that we need to have, the value in cell C22 has changed from $5,000 to $28,000. So in order to make management feel comfortable with that ratio, this is the number we would have to reach. If we wanted to keep that, we could click or tap OK. But since this is a balance sheet, we really better not be changing the values haphazardly. So we'll go ahead and click on Cancel. We can, however, leave the equivalent of kind of an electronic sticky note for our managers to review if they are interested. We'll do that by keeping cell B14 selected. Then we can move up and activate the Review tab. Here we have the opportunity to insert a new comment underneath the Comments group. With a quick click, it brings up a box that has the name of the current user, and we can type our note. We'll say 5% can be attained with $28,000 cash in hand. Nothing else is actually required of us. We can simply click off of the cell, and what we'll see on the upper right corner is a note indicator. If we pause over the cell, the note pops out automatically, and they'll be able to see the note. Otherwise, the balance sheet remains clean. You know, the balance sheet is one of the most common and most useful of financial statements. It quickly summarizes and compares business assets to business liabilities. Financial ratios use this information to allow us to very quickly and succinctly assess many areas of our business. Excel actually contains numerous tools that also allow us to see how changes to specific aspects of our business will affect other aspects. The what-if analysis tools are indispensable, and they include the easy-to-use Goal Seek that we just used, as well as the ability to store and share different options with multiple variables using scenarios. Knowing how to create and utilize financial statements, ratios, conditional formatting, and utilizing what-if tools will allow you to more easily monitor important numbers and see what adjustments are necessary for the well-being of your business. What people who use Excel tend to focus on is the data. I say often that we must have accurate quality data, as in we must have accurate quality data, or we're wasting our time. But the design of things like worksheets and financial statements also matters. If they're too difficult to read or make sense of, then people will simply not be able to, nor will they choose to use them as they were intended. It's amazing what a little shading and borders will do. Whether we like it or not, the first impressions matter as well, and they're very difficult to change. So if we have people, both inside our organization, but especially outside of it, like those from whom we'd like to gather financing or get to invest in our business, the way documents look matters very much. We want them to carry forth our brand and create an aura of professionalism and competence. We currently have the income statement file open from the Chapter 5 Working Files folder. We want to be able to share this income statement with others, internally and externally. In order to do so, we want to make sure that it looks good, but also that it designates things that are useful, like the date it was printed and who created it, and that it prints correctly on a standard piece of letter paper so people will not have to fiddle around with settings trying to fix that. Then we want to create an alternate file type for those externally who may not have access to Excel. We're actually going to begin in a place that you probably never thought we'd go, and that is file properties. File properties have been a part of files for a very, very, very long time. But unfortunately, I find that very few, dare I say almost no one, uses them. It's a shame because they're very powerful tools. Not only do they identify electronic files and provide useful information for things like searching because it's metadata, but properties are also used to generate headers and footers. And that's what we're interested in most at the moment. Properties can actually be found in the backstage. So we're simply going to click or tap on the File tab, activate the Info category if it's not already activated, and then move all the way over to the right-hand side and find the Properties drop-down. Here we can click or tap to show the document panel. This has a variety of fields, and it may actually be customized depending on what your company has done with the document panel itself. We simply want to update the author. But we don't want the author to be a person in this case because we're going to send this out externally. We want it to be the company name, which is You Got It Training. Other properties have already been filed in, like the title and the category. The category is one of those pieces of metadata that I was telling you that can help categorize and even locate files using search criteria. So all of these things really should be filled in on a regular basis. To close out the document panel, we move to the upper right corner and click the little X to close it down just like any other window. We did that because we wanted to create a footer. And you might be thinking, well, you could have typed You Got It Training Incorporated just as quickly into the footer itself. But remember that doing that hard codes it. And any other time we wanted to refer to the company name, we would have to type it over again. By using things like properties, we can reuse them. If they need to be updated, we update them once in the document panel, and everything else will automatically update. It's faster, it's easier, and it prevents actually forgetting to update something. But now let's get to that footer. In order to see footers in the later versions of Excel, we have to go to the proper view. That means we need to activate the View tab, or of course, we could use the views from the bottom right of the screen as well. From the View tab, we can go all the way to the left to the Workbook Views group and choose the Page Layout view. Now, if we scroll down, we should see that at the bottom of the worksheet, there is an area for the footer. It says to click to add footer, and so that's exactly what we'll do. This activates our contextual tabs at the top of the screen. In the Header and Footer Tools contextual tab, we'll go ahead and activate that and move all the way over to the left in order to insert a predefined footer. Here we can see some very standard options, but one that we can also see is that it includes not only the name of our tabs, which is why we always rename Sheet 1, Sheet 2, Sheet 3 to useful names, but it also includes the name of the company. The very last one that we can see says You Got It Training Incorporated, and this, of course, comes from the entry that we just made in the document panel. We'll go ahead and give this a click. We can use the options in the contextual tab to insert a variety of predefined things, but we also can work with the sections on our own if we want to insert static text. So we have the name of the company, we have a page number, and on the right-hand side, we have the current date. But unfortunately, dates don't always mean something. I think we might want to add a label to let them know that this is the date it was actually printed on, as opposed to the date it was created, or maybe even the date it was modified. We'll click and simply type whatever we want, which in this case will be printed on, followed by a colon and a space. With that done, we'll go ahead and move back to our normal view by clicking on the View tab, getting out of the footer, which you have to do first, and then choosing the normal view. So far, we've used file properties and we've configured headers and footers. In part 2 of this topic, we'll take on a little bit of the page formatting as well as the print settings in order to ensure our income statement comes out perfect. In part 1 of this topic, we worked with file properties as well as headers and footers to make sure that we had information that would easily update and properly document what the document was, who wrote it, and when it was printed. Now that the footer is finished, we're ready to take on ensuring that it prints properly and also exporting it to other formats. In Excel, of course, there's primarily two different places where we can configure how things are going to print. On our way up to the ribbon, I just want to draw your attention to the fact that at the bottom of this income statement, we have some things that we don't necessarily want to print as part of the income statement. They include internal notes or comments, as well as a place for different dates. For example, when the accountant reviews it, when it goes through managerial review, we'll just scroll back up to the top to remind us what we're working with. Then we'll activate the Page Layout tab. One of the first things we want to think about, at least for just a moment, is the fact that all business documents should share common branding. That means colors and fonts should be consistent. One of the things that I notice a lot is that many people use different fonts with different themes applied, and they really have no idea. Or they go in and they try to manually format all of this by themselves. That makes things hard. Instead, we want to make sure that the fonts are current. Looking at the font set, I can see that it's currently set to Office 2007 to 2010 using Cambria and Calibri. But that's not what our branding requirements are. They use Calibri for both. We'll go ahead and click to make sure that our default fonts actually will show up correctly. Of course, there are a variety of things that we would normally want to take a look at. We would want to ensure that the margins were correct, that the page orientation was set to portrait versus landscape, that the size of the paper was set to letter or maybe legal, which is often necessary with these types of documents. What we need to do, though, is make sure that the print area is set, because we have all of that stuff at the bottom that we do not want to print, nor do we want people to always make a selection before they print the income statement. Worse yet would be if they didn't select it and print the selection only, and then people, like maybe our bankers, would see the notes that we had made, and that can be just as dangerous and detrimental. So first, we need to select the area we want to print, and we're going to do this by clicking at the top on cell A1, and then because it's a little bit bigger than a screen, the easiest way is to scroll down, find the last cell that we want to print, hold the Shift key on the keyboard, and click. That selects the entire area that we want to print. Everything outside of it should not print. We can now go back to Page Layout, choose Print Area, set Print Area, and we will never have to worry about it again. Now, there are a couple more things that we want to do here, and it's something that I think people overlook a lot. Near the right-hand side of the ribbon, there's a group called Sheet Options, and this is where we can designate if we want to view and or print grid lines as well as headings. I would say that for this purpose, we want to view them, but we do not want to print them, so we'll take the check marks off. With all of those options taken care of, let's go ahead and preview. I'm going to do that the easy way using the keyboard shortcut, Control-P, but you can also go to the File tab and choose Print. This is the second place we want to ensure that our settings are correct. Choosing the printer is one of them. We can also see if it should be portrait or landscape, letter, some of the things that we already saw on the ribbon. One of the things that I like to do is to work with custom scaling, just to be sure that in case anybody goes in and makes a column wider, for example, that it all fits onto one page. By selecting the scaling option, we see all of the choices that we have, and we're going to designate Fit Sheet on one page. If you noticed, it shifted just a little bit, but that little bit could have taken us hours to try to figure out by tweaking the margins or working with row heights or column widths. Now we can see the beauty of what we've accomplished. It fits on one page, and if we move over to the right, we can even choose to show things like margins. Personally, I think it looks better without the margins, so we'll go ahead and clear those. We can also zoom the page so that we can see the details just a little bit better, including, if we scroll all the way to the bottom, our wonderful customized footer. With that, we could go click on the Print button on the upper left, but there's a couple more things we want to address. If we want to share this document, we can use the Share option on the left-hand side. This gives us the ability to invite people or to send the document via email. Email is nice because you can send it as an Excel attachment, or you can actually create a PDF and mail the PDF all at once. One of the other new features that's available is to work with this document and make a live online presentation. Going through this option will actually create a link that you can mail to people. When they click on the link, it will take them into your live session. You do not have to have any special software or services set up in order to do this in the later versions of Office, and it can really be a nice way to get that live interaction if you both can't be there. The other option that we have for sharing is to physically export the file. This includes the ability to create a PDF without having to necessarily email it as well, or you can change it to a completely different file type. These days, I'm not sure that you would be using that option, but it is there. The most common is to create a PDF, as well as the most common form of sharing is to send via email. When you've finished creating however many copies you need in whatever format you want, or by giving people links to them or presenting online, then of course you can get out of the backstage and come back and either close the file or continue working. You know, I would be the last one to suggest that formatting was the most important part about using Excel in your business. But I would be the first person to suggest that it is something worth considering and taking the time to consistently implement. It goes far beyond just making things look nice. It makes what can be very complex and voluminous amounts of data easier to understand and follow. It adds to the professional polish that you should want in all of your documents, whether they're being reviewed internally or externally. Formatting should not be thought of as an option, but instead as an integral part of finalizing financial statements in Excel.